These 5 small cap funds could 3x your wealth by 2030 if you choose wisely. I will show you which ones are truly compounding and the one mistake that kills small cap returns. So you invest smarter. And here's a quick note, this is not financial advice. Small caps can multiply wealth and risk. Always research before investing. Alright, let's start with the first fund that's been dominating small cap charts for years. Quant Small Cap Fund. First up is Quant Small Cap Fund. It is a scheme by Quant Mutual Fund that actually invests in smaller companies and uses dynamic calls rather than just tracking an index. AUM is roughly 29,000 crores for the direct plan. The 5-year return is about 35% CAGR. The 3-year return is about 26% CAGR. The 1-year return is about 0.3%, slightly negative in recent times. In terms of composition, it invests predominantly in small cap companies, but you will also find some mid cap or even large companies tactically, and it uses a high conviction portfolio. Its stated objective is to generate capital appreciation by investing in a portfolio of small cap companies. The expense ratio for the direct plan is about 0.71% and NAV is around 285 rupees. The scheme is managed by a team including Sandeep Tandon with over 20 years experience in equity markets and Ankit A. Pandey around a decade in fund management along with Varun Patani, Aisha Kumbat, Samir Kate and Yug Tibriwal. They form a multi-person team, which means decisions are collective and perhaps more resilient. If you pick this fund, you are backing a team rather than a single name. Ultimately, Quant is suitable if you believe in the small cap growth story and are ready to hold through tough times. Quant's performance has been bold, but stability matters too. And that's where our next fund stands tall. Nippon India Small Cap Fund. Next we have Nippon India Small Cap Fund. This is a scheme by Nippon India Mutual Fund that invests predominantly in small cap universe and has a long history in the segment. Its AUM is about 66,000 crore direct as of 30th September 2025. The 5-year return is about 34% CAGR. The 3-year return is about 24% CAGR. The 1-year return is about 0.70, slightly positive as per the latest published. In terms of composition, the fund invests roughly 95% in equities, small cap plus some mid and large, with the key sectors being capital goods 16%, financials 12%, consumer staples 10%, services 10%, healthcare 9% among others. The expense ratio for the direct plan is about 0.64% and NAV is around 190 rupees. This fund is managed by Samir Raj, who has been handling the fund since January 2017 and has around 16 years of experience in equity research and fund management. He is supported by other team members for research and decisions. For someone who likes continuity, the same person managing for several years helps. This fund works if you prefer a large scale small cap fund with breadth and decent liquidity, though the small cap risk remains. Now if you prefer smaller research driven funds that spot hidden gems before they explode, this next one deserves your attention. Third one is Invesco India Small Cap Fund, offered by Invesco Mutual Fund. It uses research driven stock picking in the small cap space. Its AUM is about 8,000 crores direct plan as on 30th September. The 5-year return is approximately 33% CAGR. The 3-year return is about 27% CAGR. The 1-year return is about 9% positive as per recent data. For composition, the fund's equity allocation is around 98% and major sector includes services, healthcare, financials, capital goods and construction. The expense ratio is quite low for this category at around 0.40% for the direct plan and its NAV is to around 50 rupees. The key fund managers are Tahir Badsha since October 2018 and Aditya Kimani appointed November 2023. Tahir brings long tenure in this fund and Aditya adds fresh energy and perspective. Their style is research driven, which fits the small cap space. If you like a focused small cap fund with a strong recent returns and can bear volatility, this is the one to consider. By the way, if you are still watching, you are already ahead of 90% of retail investors who never finishes a small cap analysis video. So far we have seen seasoned players, but what about fresh entrants shaking up the small small cap space. Fourth on the list is Bandhan Small Cap Fund, a so-called newer entrant by Bandhan Mutual Fund in the small cap space, which aims to pick quality small caps. Its AUM is around 15,700 crores direct plan. The 5-year return, though it has a shorter track, it's about 33% CAGR as per some recent quotes. The 3-year return is about 33% CAGR again. The 1-year return is about 7.6% positive as of late October 2025. In composition, the fund mandates at least 65% small cap exposure. Portfolios include small cap stocks across sectors like pharmaceuticals, real estate, private banks, among others. The expense ratio is very low, around 0.41% for the direct plan, and NAV is to around 50 rupees. This fund is managed by Manish Gunwani, joined 28 January 2023, and Kirti Jain since June 2023, along with Ritika Behera since December 2023. They are relatively newer in the fund management compared to some veterans, which mean more agility but also less long-term proven track record. If you are willing to back a younger fund with good recent performance and accept the risk, Bandhan is an interesting option. And now let's close with the veteran, the one fund that earned investor trust for over a decade. Finally, we come to HDFC Small Cap Fund. From HDFC Mutual Fund, this is a well-known name in small caps with a fairly large AUM. The AUM is about 36,800 crores for the direct plan. The 5-year return is around 31.9% CAGR. The 3-year return is about 24.2% CAGR. The 1-year return is about 7.2% as per recent data. In terms of composition, the fund invests predominantly in small cap companies, 59.4% or more, with mid and large caps making up smaller portions. Sectors include services, healthcare, financials, capital goods, etc. Expense ratio for the direct plan is about 0.68% and the NAV is around 160 rupees. The fund is run by Chirag Settlewad, head of equities at the AMC, with over 13 years experience in fund management and equity research, and is supported by Dhruv Muchal for overseas investments. Their long track record, the large size of the fund, and institutional setup may appeal to someone seeking a more established manager. If you prefer a proven name, large scale small cap exposure with a decent track record, HDFC Small Cap Fund can be on your list. Before we end, let's take a quick reality check, because chasing returns without context can cost you big. So that wraps up the 5 funds: Quant, Nippon India, Invesco, Bandhan, and HDFC Small Cap. Each has its own size, strategy, and risk profile. If you are aiming for a 3x by 2030 target, that means roughly 25% annual growth. It's possible but never guaranteed. Remember, past performance is not a promise of future results. A few things to keep in mind: small caps are high risk. They can create massive gains, but the falls can be just as sharp. Stay invested long term, ideally 5 or more, not for short term needs. Do your own research, don't follow hype. Check fund manager's strategy, diversification, and expense ratio. Diversify smartly. Balance small caps with mid cap or large cap exposure. Always monitor but don't panic. Discipline always beats reaction. Be realistic. 3x is a goal, not guarantee. Market can surprise in either direction. Which fund fits your strategy? Quant, Nippon, or HDFC? Comment below. And don't forget to like and subscribe. This is Bala signing off.